Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. Euro-dollar. A bullish opening long white Mariboso yesterday, as well as a third bullish white soldier. And a continuing follow-on higher to the recent bullish opening white Mariboso. Prices recently have based themselves on the slowly declining medium moving average, highlighted in mauve on my daily chart, currently at 107.51. And they were yesterday based on the 50% Fibonacci line for 2023 at 108.64, plus the surprising short moving average, currently at 108.73, for this move higher. This pushed prices up through the combination of the broken lower bull channel line, currently at 109.39, of the whole of the 2023 move highlighted in dark blue on my daily chart, plus up through the upper bull channel line, currently at 109.55, of the broken October to date bull channel, highlighted in green on my daily chart. And finally, the recent 50% Fibonacci line at 109.44. That's of the big January 2021 to September 2022 move. Now, I suspect this 50% Fibonacci is the most interesting one of these three, but they nevertheless all do so conveniently coincide. So where are we now? Well, we are once again outside the broken, then repaired, and now broken again October-based bull channel, currently 106.91 to 109.55. And I'm tempted to now relegate the importance of this bull channel. We are once again also within the broken, repaired, broken again, and now back within the 2023 bull channel, currently 109.39 to 112.72. I'm also considering relegating this shallower bull channel. Now we also have still open target X2 at 111.11, the secondary hard to reach target overhead for the July to October bear channel at 109.98. I'm still wondering whether to retire this secondary target or not. Finally, we still have the early November to early December bullish Andrews picture, not highlighted on my daily chart for now. The market closed on the middle time, currently at 109.99. Now, I do not have any special attachment to this bullish Andrews pitchfork, and I could easily finesse it into a bullish shift pitchfork or retire it completely. So far today, a reactionary move back down, looking like a possible bearish dark cloud cover pattern, as well as a possible two-day tweezer top right now. The decline has been halted at the mess of trend lines surrounding the big 50% Fibonacci line at 109.44. Cable, aka sterling against the US dollar. A continuation of the unusual patterns here yesterday, a bullish long white Mariboso and fourth bullish white soldier, following on from the two prior consecutive key reversals up. The action was large enough to set up the conditions for a possible weekly key reversal. Thus, if we close tonight either over 127 or below 125.46, then we're beyond. Anything in between would have the lesser outside weak pattern. Right now, we're looking at a weekly key reversal up, if only just. Overall, the market 2 weeks ago finished its move up from the September to November double bottom and rounded bottom pattern combination, achieving all its targets on the upside. Since that peak, interestingly right on the 50% Fibonacci line of the big June 2016 to September 2022 move at 126.99, which we sliced up through yesterday, we'd overall pulled back a bit to seemingly base on the slowly rising long moving average, currently 125.06, and highlighted in gold on my daily chart. This peak and limited decline with yesterday's move up caused me yesterday to wonder if the action since late August today may be a potential cup with handle pattern in formation. Now, it may also be a possible bullish half hesitation, but that would be intrinsic as part of the handle, so I'm watching the daily action very closely. In the meantime, I can lay out some potentials topside. So for a cup with handle pattern, we have a primary target X in the 130.80 area, for harder to reach secondary target X1 in the 133.25 area. For the potential bullish halfway hesitation, we have a target in about the 130.50 area. The one other pattern I know is in existence is the bow tie formation formed 2 weeks ago of the short moving average, currently 126.20, the medium moving average and the long moving average. The moving averages did not enter in the correct order, but they did cross over on the 1st of December. and indicated a rise immediately after, even if entry and exit were not unanimous. The theory behind this suggests that between 15 to 20 sessions after the crossover, so that is between Christmas and New Year, we may see a move upwards in the direction of the moving average as they crossed over. With the lack of liquidity over this period, I think I might add a few more days onto it into the new year just in case. So far today, a lower open and a small dip, but the market has recovered and is challenging the top side, though it's looking like an indecisive doji cross right now. The next resistance above is the November 2020 low at 128.52. Euro sterling. An indecisive spinning top yesterday, but also a bearish harami, if only just on the latter. For the last week and a half, the market has formed a base on the March 2022 today uptrend below, which is highlighted in bright green on my daily chart, currently at 85.54. Midweek this week saw an attempt higher from this base uptrend. However, the top side has been capped by the first obstacle overhead, and that's the flatlining medium moving average, currently at 86.36, highlighted in mauve on my daily chart. Better resistance awaits further up, with the combination of the short medium moving average, currently at 86.66, and the April 2020 low at 86.69. One other item, and it is a significant one to watch. We are set up now for this week to be a weekly key reversal. So, if we close today either over 85.72 or under 85.56, then we'd be on. Anything in between and would have the lesser outside weak pattern. Right now, we are looking at a weekly key reversal up, if only just. Yeah, only just. So far today, a further move lower, but the market seems reluctant to test the light green uptrend below. US dollar against the Indian rupee. A gapping lower open, since filled in, that led to a lower bullish white soldier. The main bodies separated from each other over the past 2 days is therefore a day 2 action in a 2-day separating lines pattern. The base of the action was on the October 2022 high 83.27. Overall, the market continues to gingerly move higher within the September to date bull channel, highlighted on my daily chart in dark blue. That's currently 82.98 to 83.59. This bull channel is the emergence we've seen from the prior pattern, the July to October ascending triangle. So this bull channel, this shallow bull channel, is not the most enthusiastic of such patterns, but it's still there and ties in with last week's weekly key reversal up and last month's monthly key reversal up. So far today, a really strong move lower, looking like another but larger day 2 in a 2-day separating lines pattern. Only this one has seen prices drop down through the October 22 high, the short medium moving average currently at 83.24, the medium moving average currently 83.10, and even the highlighted in dark blue September to date bull channel. Prices finally halted at the November low at 82.90, and we've seen a recovery, but not far enough to confirm a close back within the bull channel. Not really, not yet at least. US dollar against the Brazilian real. A really interesting piece of action yesterday, a counter to the counter bullish open and close white Maribosa, but also day 2 in a 2-day meeting lines pattern. Prices opened down below the 2021 low at 489.06, but recovered enough to close within spitting distance of the previous close. Overhead, we now have again the medium moving average currently at 494.78, the long moving average currently 495.15. The 50% Fibonacci line of the October 2019 to May 2020 move at 496.81, and the very slowly declining short medium moving average, currently 497 even, entwined around the previously broken upper trend line, highlighted in purple on my daily chart, which is currently 497.25, the August to September rectangle pattern. Though it was a sharp move lower, we are still pretty much centered within the rectangle pattern, broken rectangle pattern. Thus overall the market is still well within the breached but repaired November 2022 to date bear channel, the bigger pattern, currently 466.27 to 511.15, and that's highlighted in bright red on my daily chart. I'd just like to take a moment again to appreciate this bear channel once again. It has been in operation now for well over a year. The only other comment I can give at the moment is how very much like a head and shoulders pattern the action since July to date has been. No more than that at this time. US dollar against the Mexican peso. An indecisive spinning top yesterday, but also a third bearish black crow and follow on to the previous session's unusual key reversal down. The cap on the market was a slowly rising medium moving average, currently 1741.65, whilst the market showed reluctance in approaching the support below, made from the combination of the congestion generated just under 1720 even from 3 weeks ago, plus the March 2016 low at 1709.23 and the declining neckline highlighted in green on my daily chart, currently at 1708.61 of the February 2021 to April 21 move. Just underneath those we have the April 2016 low at 1703.89. Overall, the March 2016 low and neckline combination managed to halt the decline throughout late October and early November, and the long moving average above, currently at 1751.15, is seemingly stopping a recovery at this time. Thus we are situated right now just after the market reached both primary and secondary downside targets for the September to October bull channel, and I suspect searching for the next thing to do. So far today, an unwillingness to head lower with a nascent bullish engulfing pattern right now. We're still within yesterday's range, but it's still early. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.